Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Charter Hall is Global Head of Investor Relations, Richard Stacker. Richard, welcome back.
Thank you.
Now, can you start by giving us a brief introduction to Charter Hall?
Charter Hall Group is a property investment and property funds management business. We earn revenue from investing alongside our partners and our investors in the funds that we manage on their behalf. We manage about $19 billion of funds. And we earn revenue, as I said, from those property investments, but also we earn fees from managing those property funds and assets on their behalf. Our investors include big sovereign wealth funds, both here and overseas, pension funds as well, insurance companies. We also have a very big book of high net worth and self-managed super fund clients.
And Richard, now to your first half 2017 results. What were the highlights?
Look, we're very proud of our results today. Operating earnings per share were up 37.7% on the prior calendar period. Our total return on our property investments was 16.4%, and that total return includes not only the property yield but also the underlying growth in the asset values. We've also announced an upgraded earnings in terms of guidance, which I'll touch on at the end.
And Richard, taking a look at each business now, how did they contribute to the group's financial results, starting with property investment?
Charter Hall co-invests almost $1.3 billion of its balance sheet in its funds alongside its investors and partners. Over the last 5 years, those funds have returned on average for Charter Hall's investment 17.5% return. That compares to the MSCI IPD property index of 9.9%. So we're very pleased that we've outperformed the benchmark significantly, and that obviously has meant our underlying funds have performed very well as well.
And what about property funds management?
Funds under management grew to $19 billion over the last 6 months. This is off a record transactions of $3.8 billion, which also includes $0.8 billion of underlying property valuation increases. We've also had a very good 6 months for equity inflow, $1.3 billion in equity inflows, a record in our unlisted retail business in terms of equity inflows, but also with the launch of the Long WALE REIT, a significant amount raised from our listed investors as well.
And Richard, what's in the development pipeline?
Look, we've got a very large development pipeline. As at the end of December, it's almost $3.8 billion. We've just completed projects in Sydney, 333 George Street, right in the heart of the city here, but also at Parramatta. We've just finished a development on behalf of Western Sydney University, which they'll lease on 15 years at Parramatta Square. We also have some major developments underway with 130 Lonsdale Street in Melbourne, 900 Ann Street in Brisbane, and also development in Rain Square in Perth. Our retail book is also fairly full. We've got Secret Harbour over in WA that we're developing, and also up in Mount Hutton and Lake Macquarie, a development underway there. Similarly, in our industrial book, developments at Chullora are underway, and also in Drystone Estate down in Melbourne.
And Richard, a key milestone for the group was the float of the Long WALE REIT towards the end of last year. Can you tell us a bit more about that?
Sure. The Long WALE REIT is the largest diversified real estate investment trust in the Australian market. We launched it last year after recycling a number of assets from existing funds in our wholesale and also our unlisted retail business. Charter Hall's co-invested almost 20% into that Long WALE REIT, and it really goes along the strategy of our business to have long leases to very good tenants in very good locations.
And finally, Richard, what's your guidance for the second half?
Charter Hall announced today that it was upgrading guidance to 37.7 cents per share. This is actually 24% up on a pre-tax basis from the previous year and up on previous guidance of 17 to 18%.
Richard Stacker, thanks for the update.
Thank you very much.